Hello, traders. It's 8:02 a.m. Chicago time on Monday, the 11th of March, 2019. Thanks for joining me again. Hopefully, you're hearing me loud and clear. Derivatives trading involves substantial risk of loss and is not suitable for all investors. I got to stop saying good morning and start saying happy Monday because it's not morning everywhere. This morning, the overall sentiment is really mixed. Slight risk on. The Dow is off quite a bit while the other indices are higher. And it's because the Dow is price weighted, which, back when this was created, it made sense. But in today's market, it doesn't make sense. Price weighted means that the weight of the stock within the index, within the Dow 30, is based on its price, not its capitalization. Okay, so that's what we've got. Mike's a little hot, turning it down a little bit. Yeah, I'm turning it down. I actually moved offices, so I had to reset up, and it may be impacting things a little bit. So Mike should be less hot, a little cooler, maybe a little cooler now. Hopefully that's clear. So the Dow getting hit with Boeing getting hammered on the news of the Ethiopian crash of their 737 MAX 8 jet, which corresponds with another crash with Lion Air. And so that airlines being configuration of a 737 is being grounded by China. Approximately 92 airplanes are grounded in China, and I believe Singapore and others have followed suit until further investigation. Ethiopia, of course, grounded the rest of its 737 MAX 8 fleet. And so that reflects very badly on the stock. We still don't know why this airplane crashed right after takeoff. Nobody survived. It's just a tragedy. And so that is causing the Dow to be down 206 points currently, while the S&P is up about 6 points. The Nasdaq's up almost 30 points. This is why it's happening. Those other indices are market cap weighted, which means that the impact of the stock on the index is based on the size of the company. Market capitalization is defined as the price of the stock times the number of outstanding shares. So it creates. So what do you care about that? You need to know what's going on with the indices if you're trading an index, but also it just creates a weird kind of anomaly there. The S&P and the Dow are correlated. If you look at a daily down to a minute closing bar basis, and you look at the spread correlation, these two products are correlated somewhere between 96 and 99%. Not so today. So with that correlation kind of breaking apart, the spread of the S&P against the Dow, which is, believe it or not, is traded, that spread is going to be a little goofy today, which may cause some turbulence within the S&P. That's where we arrive to how it impacts us in the S&P. So here's where we are. The volatility index is at 16.4. We did have some volatility into the close Friday in the S&P. The market, across the board, the market ripped up after resting and going sideways all day. The volatility is welcome. Crude's the leader today on news that the Saudi energy minister saying that there's not likely to be any OPEC-wide supply cuts until after the June meeting. Causing a little pop there. So we have a mixed set. We have a gap up in the S&P. We have a gap up in the Russell, gap up in the Nasdaq. And so the allocation is slightly to risk. I believe German industrial production came in a little off this morning, kind of put a lid on the European advance. and that's where we're standing right now. So what's ahead? There's really not much to talk about in terms of releases. I believe we get business inventories for December at 9. That's a low tier number. And then we have Fed's Powell speaking this evening, 9 Central, that is, speaking this evening at 6 p.m. Central, 7 p.m. Eastern, according to my calendar. Let me refresh and make sure that that's correct. Still, yes. So Fed Chair Powell speaking at 7 p.m. Eastern. And that's really it. Let's take a look at what we expected on Friday versus what we got. This is what I was looking for on Friday. We were looking at a gap down to 27.31. Remember, 27.37 is the large and most accepted price in the area. 27.37 is the MC point of control for the entire 2018 coming into and including the current action. So in either case, I was looking for entanglement in this area here. The primary scenario is to fish down, to continue to try to initiate down, come back up, consolidate at the 737, 27.37, and then end up somewhere in the middle, somewhere where we opened, most likely with a gap zone remaining open. This has been the tradition for this product. Alternatively, I was looking for this to drift up, responsive buying into the prior auction. The prior auction, of course, is right here. Responsive buying that fails somewhere in the 27.40-41, and then we would get a pop down and a push through the overnight low and hold steady. I expected the overnight high or the overnight low to be broken. Remember, the overnight statistic is approximately 98% that the overnight high or low is likely to get taken out during the day session. Of course, I'm leaning on the low here. So scenario 1 takes out the low early. Scenario 2 takes out the low later. But in either case, I expected it to go sideways, and it was all well and good until the afternoon. So why is my trigger charge on 15 minutes? Let's see. Let's switch it back to what it's supposed to be. Sorry, this is reloading. Come on. Okay, so here's what we got in terms of what the price action showed. So recall the overnight session low is 27.75. The primary scenario is initiative away from the prior session, which means that we are likely to sell into the open. We have an open auction. An open auction that takes forever, right? Lasts a while. Not forever, really, 15 minutes. And then we break the opening swing high, which for some reason is not showing here, of 33.75. We break, and then we come back down, and then we push lower. And there's the break of the overnight low. The overnight low is right here. Break of the overnight low down to 26.50, and then back in the range. And this is basically what I expected, that we are likely to test, and then hold sideways. So scenario 2 in play here, responsive at first, right? Pushing back towards the range, and then falling down. We have an impulse down in here, and you could see the down rotations. This is this graph down here, in case you think this is some sort of RSI or something. It's not. It is an indicator of the rotations within this 2-tick Renko chart set to 7 ticks. It'll reset the bars will reset on a pullback of 7 ticks. That's just how the statistics work right now with the current range and volatility. And we end up breaking lower, which is scenario 2, right? We attempt to push higher, and then we break lower, break the overnight low, and we hold steady sideways. That's what was expected, and essentially that's really what happened until later in the session. So we put in the initial balance right in here. the initial bounce. We have an initial bounce high at 37.50, initial bounce low at 26.50. And then, so now we're playing, we took care of the overnight stat. Now we're looking at the IB stat. Does anybody remember what the IB stat is? I'm not going to wait for you because there's about a 10-second delay, and that would be boring for everybody to wait. But the IB stat is it's likely to break the higher low, also around 98% high or low. So now we're looking for a break of these yellow lines. Again, we trade on probabilities as much as we can, and we lean on our homework to initiate trades into those probabilities. And so we break the IB high, hold steady, pretty normal behavior here until we start to make a run for that high. We have this really strong swing of 9.25 points. That's an impulsive move. Impulsive move means I'm looking for a pullback to somewhere. I'm looking for a pullback generally to a prior zipper, so maybe 27.40 or so. If not, then I'm looking for a pullback at 37.5 before this 44.75 is taken out, unless we get a lower high and a break of that low. And that's what we got. We got a lower high and a break of the low. So no follow through at all until much later in the session. And then as the last 20 minutes, the closing range takes place, we end up pushing up and pushing into the high of 27.52.50. Okay, and we close at 27.52. So overall, a pretty orderly auction until the close on Friday. And on a bigger picture perspective, we have a lower low on the week. So the weekly has stopped one-time framing up and is one-time framing down. So we see that we put in a peak of 83.50, put in these new highs on the swing, and we've had lower highs, lower highs, lower highs, lower highs all week. So we got to keep an eye on these highs. And then today, what we're doing is we're coming in with a higher high. So we're starting to break this trend down of lower highs just by opening above that 27.57. So we're looking for a reversal back up into the 200. It's looking a little bit bullish today, and I'm looking for support around 42.43 initially. So that's the overnight. I'm running out of time here. That's the Friday's response and review of the action. This is the overnight session. The overnight session, where does it pull back to? It pulls back to 41.75, the key swing high of Friday right there, 41.5. Pretty orderly. It is the bottom of the break area, and then bounces back up, and then it ultimately tests that Friday high, and we're holding steady near highs. We have a sort of a P-shaped profile here, although it's kind of got a weird thing down there. We've got a sort of a P-shaped profile. We're moving away. Price has moved away from VWAP, the mid. The point of control is near the upper distribution. And overall, it's looking a little bit bullish, although it is pulling back a little bit here. This looks to me like more of a bull flag. You know, on a short time basis, this is a 15-minute pullback for continuation. That's the overnight. The overnight volume is okay at 170,000, and the range is pretty good, almost 20 points, about 18.25 points. That's what we're seeing currently. So, what do we have for today? So for today, I have to tell you about this event. I want to let everybody know that we're having, Convergent has its first anniversary in a couple days, March 14th. It was launched a year ago. And for this event on March 21st, we're having a trader spotlight that is open to all traders, to the public. And even if you cannot attend, you should register so that you can get the video sent to you. We're going to be talking to Yra Harris, who writes a blog called Notes from Underground. And the reason we're having him on, the reason I'm looking forward to talking to Ira, I was on the Futures TV show with him. I met him. I hitched a ride back to Chicago from the south side with him. He was nice enough to give me a ride into the loop. And I was just fascinated by his views on the global macro position. He's a global macro trader. And I thought we would have him on for a change instead of having another regular day trader. I thought we'd have him on for a change because he looks at things from a much bigger picture and trades on a much bigger time frame. I felt that I could learn a lot from him and everybody else would benefit. So register. It's go the number 2 ct.pro. Go to ct.pro/03 2019 IRA with a capital Y. Okay. So let's look at what we've got for today. The current conditions. Yeah, I'm running into more and more global macro traders. They seem to be seeing things that I'm not because they trade on bigger fundamentals. And he's a futures trader, so he's all over the place with currencies and currency pairs and spreads and yield curve and all that stuff. So we're opening in a gap, 27.56 most likely. The high of Friday is around 27.5250. We're opening right on top of the point of control of last Thursday, right on top of last Thursday's close. I'm expecting a choppy open. We're back in this range. Remember, we left this, I don't mark it in my flex levels because it's only 4 ticks, but we have a gap down on Thursday, and we extended the range down before we gapped down on Friday and came right back into the range, which is unusual. But today, I'm looking for an open auction out of range. I'm looking for the market to make a continued push higher. I'm not expecting it to follow through. I'm looking for 27.62, 63 up here to provide some initial resistance. And then I expect the market to move back and become responsive into 27.43, 44, and then back up. Now, it's Monday after payrolls. Generally, a day like today is Monday after payrolls. The range is usually relatively tighter and the action is less muted. But we'll see how that plays out. I'm open. I'm game for whatever the market just tries to throw at us. I'm not locked into anything, but that's what I'm looking for. I'm looking for it to continue higher, to be initiative at the beginning, and then to turn around and be responsive. It can push as high as that 66 you see there, this peak right here. Secondary, open auction that is responsive, pulls back towards, gets tangled up in the overnight point of control at 54.25, pulls back into the prior range, into this 44 whatever, and then starts to push higher and continue. I don't expect the overnight low to be taken out. This again, we're breaking the one-time framing down. I expect a little pop today. That's why I'm biased to the long side early in the session. These are the two main ideas for today. The tertiary is a push higher that gets an impulse down, and that'll be an open test driving down, in which case I will be off of longs, and I'll be looking for a ride down into 41.75 and a push lower into 27.3750. So that's the third scenario, an imbalanced scenario, where we open up, we push this high early on, and then we get an impulse down that pushes us back into the range, and we have a bit of a drive, and then we come back and balance out at this 27.37 area, this most accepted price over the last year. That's the third scenario. Okay, so we end up with a higher high, probably a higher low. If not, then we're likely to continue to fill the gap below, fall below 27.25 and continue lower into the 20s. But most likely we'll end up with a higher high, higher low, and the one-time framing is ending, and a new, potentially new trend forming with higher lows over the next week or so. Remember, it's rollover, so your volume-based indicators, your deltas and stuff are going to be off. So be careful relying on volume-based readings, because there are a ton of calendar spreads going on. The pace of the roll, according to the CME site, is around 45% or so. This morning, 45% is a little bit laggy. It's a little bit behind. It seems like more people traded March, continue to trade March into Friday than we would normally see. I'll leave you with that. Don't forget to register for the Trader Spotlight on March 21st with Ira Harris, looking at global macro trading. Good luck.